Hey everybody, Chuck Barone. It is Tuesday, January the 9th, 2023. Good to be back today. I apologize for missing yesterday. Had a under the weather kind of day, but feeling pretty chipper today. Before I get rolling, let me take a half a second, as always, and welcome everybody to the show. Thank you guys for your support. You guys are the guys that keep the show going, man. We appreciate you guys, and I apologize for not being as consistent putting these videos out. Crazy busy season with the holidays and not feeling so great for a day or two. But anyway, it's going to be an awesome year this year and a lot of stuff to talk about today. All right, so let's talk about markets. As you guys know, we started this new year. The talk has been rate cuts. Market pricing in rate cuts starting as soon as March. The market seemed to be pretty much convinced that that was a reality, even though I've been warning you guys that it's amazing to me that it could all happen so perfectly for the Fed. Well, now we're starting to get some cracks in that little bit of a crack in the ceiling there, where maybe now they're not so sure things are going to play out the exact way they've been predicting and pricing in. So the markets today had a little bit of a wobble. Stock markets ending mixed. Listen to these numbers. So the Dow comes down 157 points, 37,525. The NASDAQ, however, turns around and has a gain for the day. Their NASDAQ ending up 13 points, 14,857. And the S&P falling, the broader market falling 7 points, 4,756. So as you can see, this market just had a weird day. I think that the stock market's going to have to adjust. These numbers might be a little bit lofty. Then again, though, the market sentiment seems to be flip-flopping around all over the place. You know, we went very quickly from perfect landing, soft landing, no recession, rate cuts coming, inflation battle fought, to now a little more skeptical view of things where if anything goes wrong, you got the Red Sea shipping, you got supply chains, that always makes a big mess of commodities prices, which starts the ball rolling on price increases. So the market's digesting that news, maybe hedging a little bit on the certainty of those rate cuts coming so quickly. The bond market feeling the same way, although not dramatically today. Bonds do sell off, though. The 10-year up just 2 basis points, sitting at 4.02%. Was up over 4.05 earlier in the day. The 2-year up another 2 basis points, sitting at 4.36%. I think that the 2-year has some room to the upside if these rate cuts do not come to fruition. So the bond market's still a little bit uncertain. Rates not as high as they were, but then again, not as low as they were just about a week or so ago. You had the 10-year sitting at around going down toward 3.5%, now back up over 4%. So rates been fluctuating, gyrating with market rumor news, kind of news, and, you know, of course, heavy influence by the things that the Fed people do and say. Dollar today rallies up a little bit over a quarter point, sitting at 102.52, basically a big nothing burger for the dollar. Not much movement. A lot of people betting now the dollar going to come down. We'll have to see how that plays out. With the dollar kind of strengthening a little bit, metals were mixed today. Gold picks up a gain, $2.10. Now $2,030.30 for an ounce of gold. Silver falling 14 cents, $22.94 for an ounce of silver. As I've been saying to you guys, I believe silver is going to really have a nice run as this dollar comes down. We were back up over 23, now back under. I still think 25 is the target. I think we'll get there pretty quickly. Oil today up $1.46. But still exactly where we expected to be, $72.23 for a barrel of West Texas Intermediate. As we've been telling you guys, we really believe oil seems to be most comfortable trading between 70 and 75. It's kind of been bouncing up and down between those numbers. Might break out a little bit to upside, might break out a little bit to the downside, but it really quickly gets right back into that trading trough. So it seems like all's well with oil. It's where we expect it to be. Bitcoin coming down today, down $1,256 Still, though, lofty number, 45,883 for Bitcoin. Strong number. This ETF rumors are what's driving this, it seems to me. But that's not a done deal yet. SEC today coming out with some interesting statements about it. I think that's what drove price down a little bit today. So we'll see where it goes. They're due for a decision. Actually, for what I read, they're due for a decision on that tomorrow. I'm guessing if the decision does come tomorrow, it's going to be no still. All right, let's talk about news. U.S. credit card debt. Oh, God, guys. So the most recent month we have numbers for is November. Okay? Credit card debt surging, increasing. Now, listen to this. Revolving debt, just in November, for consumers, increases $19.1 billion, and the vast majority of that revolving debt being credit cards. So basically, consumers having to use their credit cards. I'm sure that was what sparked a pretty good Christmas for a lot of people. Credit card debt rising rapidly. Now, when we reported just a month or two ago, over $1 trillion. Not scaring anybody, adding another $19 billion on in November. I'm sure December is going to be pretty high too. This is not great news for consumers, guys. Credit card interest rates, MasterCard, Visa, all the rest of them, now averaging over 22% annually, making payments go up. So now you have debts going up, rates higher, payments going up, everything very high. As a result, guess what? Delinquencies on credit card payments, now higher than pre-pandemic levels. Delinquencies on car payments, which I've been ranting about for a while on this show, now higher than pre-pandemic levels. So consumers in hock going under, man, can't make payments. You guys have heard me rant about car payments. The average payment over $700, almost 1 in every 5 persons who has a car loan has a payment more than $1,000. Ridiculous, ridiculous numbers. Now credit card debt, people carrying high balances, you're going to pay 22%, really? Getting eaten alive by these bills, guys. Consumers just cannot handle those kind of payments. And now this week, we're going to get some big news because we know we're going to get CPI, PPI this week. Those numbers, you could see rates go higher on credit cards. So hopefully these people have a little bit of a plan to pay some of this debt down. Just today, the Treasury is selling $52 billion in 3-year notes. $52 billion just today. They said that the offering was oversubscribed. That's good because they have a 10-year and a 30-year auction coming this week. I think the Treasury trying to raise around $200 billion just this week. Crazy, crazy ass numbers, right? And the SEC today coming out very, very skeptically about the BlackRock ETF, talking about protections and SEC laws and how the Bitcoin product is not really within the guidelines of the way SEC typically, has registration and governance of securities. So it's going to be fascinating to see. This is kind of a foreshadowing, is that what they use in the literary world? That they're not going to approve this ETF tomorrow. There's going to still be some work. And I think if these cryptos want to have these ETFs, which are heavily regulated, they're going to have to succumb or at least agree to some rules and some stuff that can limit the downside and the amount of fraud that consumers can be subject to. Interesting news today, consumers feeling much better about inflation, even as their debt skyrockets. They anticipate inflation falling. Consumers see inflation below 3% this year, falling to 2.5% next year, and then falling at or below target going forward. They're now in line with expectations of what inflation would look like before there was the big spike, before we all even had the word inflation in our mind. So now the inflation expectations kind of back to normal. If 2.5% can be considered normal, 2% considered normal. I don't know. I guess this is kind of good news, because if people believe inflation is going to be higher, they typically tend to behave a certain way, and that's good for the economy. You know, if you think the price is going to be higher tomorrow, you tend to buy more today, right? Now, with the numbers falling back to pre-inflation spike numbers, well, it looks like consumers believe in this fight is won. I guess I must be the only guy on the planet who's got a skeptical look on their face about this, because it's just impossible that a problem this big could be worked out this easily without any glitches. It just doesn't seem like it could possibly happen. Now, I may end up eating my words on this, but I got to say I doubt it. BlackRock today coming out, other analysts as well, saying do not expect Fed rate cuts this year. At least not in line with what the market is seeing, what the market believes they're going to be. Now, they're pointing to Red Sea shipping, which has been a big problem, insurance rates skyrocketing for shipping through the Red Sea, other geopolitical problems, wars, threats of wider wars. You got a tight labor market with wages rising, and you know the Fed expects wages, you know, they really believe expects is not the right word. They believe that higher wages, wage increases are a big driver of inflation, and that may very well be, because those dollars tend not to get saved, they tend to get put right back into the economy. But you know, how much more goods are you getting if inflation, the cumulative effects of inflation are 20%, and the cumulative effect of your pay raise is 5%? Well, you know, you're not even earning enough to pay to have the same goods and services with their new inflated prices. So I don't know how inflationary that can be, but they both said they expect to see inflation surge higher this year. They think that the Fed will have limited options, and they'll see increasing volatility in the bond market, which has already been on a very, very wild ride. With, you know, when you see a bond market moving, you know, 8 basis points, 10 basis points, 15 basis points, 20 basis points, that is not normal. Today, 2 basis points. That is more in line with what you're typically going to see. So what do you guys think? You think we got this inflation fight won? You think BlackRock's and their other analysts around Wall Street are right in sounding the alarm on these rate cuts? You know, I think that these guys are thinking a little bit more in line like I am, although I guess mine just goes to history. To my knowledge, they've never pulled off this soft landing, and I just seriously doubt this is going to be the one where they do it. Now, we'll see, and personally, honestly, I hope I'm wrong. I do. It would be great if the economy could come rip-roaring back this year. It'd be great if the Fed could cut rates 4 times this year. That would be great for me personally, and certainly good for my business in real estate. But I don't know if it's the contrarian in me that says when the herd is all heading one way, it's typically toward a cliff. I got my reasons to doubt it. Anyway, guys, that's it for the day. We'll be back tomorrow to bring you guys the news you need. Tomorrow's going to be an interesting day, Thursday, as we move towards CPI numbers, PPI numbers. We'll see how this week finishes. I think we're going to have some volatility and some uncertainty. It's going to be fun to watch it. Of course, we'll bring you guys the news you need. If you could, guys, please hit the like button. It helps get our videos out in front of more people, gets us some extra views. We appreciate that. We'll be back tomorrow to bring you the news you need, guys. Till then, take care. Thanks.